Should investors be getting nervous? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hey, Dale. Happy Friday.
What a wild world we live in.
It's so true. It's so true. I thought you were going to say, what a wild day. It's been a wild day. It's been a wild week. It's been a wild year. But yeah, I mean, so much action just today. And we can walk through what you were watching. But I was thinking about you as I have been watching the action all week because a lot of what transpired, you were really positioning for and talking to us about last Friday, as usual. But then we had this kind of interesting, as you just mentioned, really kind of powerful comeback, not all the way, but we did see a sort of, a surge in buying that pulled us off those lows late day. So let's start with stocks because that seemed to be where a lot of the fireworks were.
Okay, well, let's look at S&Ps on a weekly basis. So I know we left a tail because of everything we did today, but we still have what I call a 2-week reversal, which is the market closed under the close from 2 weeks ago. 798. So it's still qualified for a 2-week reversal. I think that a lot of what happened today was hoping that they reopen the government. But just as I was bearish, Nvidia, Palantir, and in general, the whole market, but semiconductors in particular, I don't think Michael Burry's thesis and narrative on shorting that stuff was based on the government being closed. So, of course, we're going to get a reaction. And I think that part of the market looking for the government to reopen is already starting to be discounted here. So if there is an announcement, I still think there was a lot of damage done. Maybe not as much in the averages, but when you look at something like Nvidia, which came back pretty good today. This is a broken. This stock is topped. Now we broke $30 from last week's high, so it would be completely normal to see Nvidia rally back towards 195, which also happens to be the high before we blew off to new highs. So this rally could still be a nice selling opportunity to raise cash in these and a shorting opportunity as well. Same situation with Palantir. This was a $50 decline. So for it to rally back to 190, 195 also would be natural and would be a failing rally. So there are certain segments of the market, I think in particular semis, that have suffered a lot of technical damage, and that these rallies, although you can make money being long here, I don't think we're marching to new highs. I think you'll see failing rallies in these. And actually, I still think that Nasdaq was damaged worse than S&Ps, and I'm not looking for new highs in Nasdaq, although we recovered nicely. We've come down from 26 to 1,600 points, so up around 25.4 or so, be about halfway back. So it's very possible that this rally today has people going home feeling pretty good. And then what if negotiations fall apart again and people walk away? And they're trying, but they can't. And then you're going to have huge disappointment and just wash out under those lows. But any reopening to me, especially with the hope rally that we're getting here, is a rip to sell into.
So yeah, it's so interesting because even if we reopen, I'm trying to sort of, thread through what the real bullish, I mean, aside for travelers, obviously good for travelers because it's been a disaster at an airport. I'm sorry if any of you are watching us stranded at one. By the way, Hi everybody on Substack and YouTube. It's good to have you with us live. Put your questions and comments in the chat as always. But it's been an utter disaster. So I see the relief on that front. I'm not sure why that would be justification for the markets to trend higher, especially we had some pretty nasty University of Michigan sentiment out today, the survey, lowest reading ever, I think, for that. And one of the jobs reports right this week, Challenger Grain Christmas, reported layoffs in October that were the worst reading for that month in 22 years. Remember, usually we get seasonal hiring for holidays. So, we're kind of in this vacuum of no economic data with the government shutdown, and maybe you don't trust it at all. But, we saw the election, how that played out, affordability very much on the minds of voters as they exited. So you may not agree with their choice, but it is clear that the economy, that there's a lot of concern on the part of voters around the economy. So I'm not sure what the government reopening, why that would be potentially.
That's a psychological thing.
Yeah. And
it's so this break was not because of the government shutdown. Yeah. It was because valuations, they had to take some air out of the market. Maybe they took enough air out of it and we're just going to blast to new highs. I'm ready for anything.
Yeah.
Because I'll tell you what, earlier in the day I said, yep, this is it. And I had no doubt. And I thought we could rally. I didn't want to see it all in one day. But let me just remind people that in bear market rallies are short, sharp, and not long-lived. So we'll know probably by early next week if this rally has legs or it was just a hope rally. And also there's an old Wall Street adage, and we're not there yet, that bears feast on Thanksgiving, the bulls on Christmas. So we're still a couple of weeks away from Thanksgiving. I know a lot of people are looking for a strong November. I still think regardless of this comeback we had today, if you get macro, look at what it held. All right. So here's the Nasdaq holding the 50-day that it held. I can tell you one thing, that if we take out today's lows in Nasdaq, the 50-day, it opens up the door for 22,000 on the 200-day. And I still think that's possible. So, I think that people are going home going, phew, okay, and a relief. And if there's some hiccups over the weekend and it looks like there's an impasse again, this 50-day moving average will give way. In the meantime, what you do as a trader is you take the measured move that we had from here to here, and, you go to something like a fib tool, and you start thinking about, well, nothing ever goes straight up or straight down. What kind of retracement could we have? So we've already retraced 23. We're not even 38% back on Nasdaq. So it's normal in a bear market or a bull market to trade 50% retraces. WD Gann traded 50s. So that means, we could have another 400 points left in Nasdaq before it reverses again. And that's what you do as a trader. So if you're bearish, and you had plenty of opportunities all week if you were short to make money. So if you didn't go to the door, something I stress on something all the time, and you're just holding for a crash, now you're giving back profits. So there were plenty of opportunities to take shorts. I mean, we're down over 100 handles or so on the S&Ps. A few different days. So if you're bearish, you take something in. We could look at the S&Ps and do a fib retrace there as well and see what we come up with for a 50% retracement. So this kind of keeps it in perspective that, yes, we recovered, but what about the damage from 69.20 to 640? In a matter of 2 weeks? This is a 4-hour chart. Okay. So the fibs aren't coming out right on this, but I still think that there's a chance that this is going to be a failing rally and we're not just going to blast to new highs.
So Dale, in this kind of situation, given the kind of that surprise rebound, at the end of the day. Are you just neutral? Because you were shorting tech stocks, if I'm not mistaken. And I know you've been banging the table on Palantir and stuff. You saw that big move. Now, do you step out of the way and are you sort of just in wait and watch mode, or are you thinking about probing around a little bit if you think there's another?
I held some. I held some. I didn't. If you get out of everything, that's a difference between all in, all out, and doing partials. If I covered everything and we didn't have a recovery but continued to melt down towards this 100% tariff day, which I still think is possible. In fact, if I'm right about the bear market case, I think that we could trade back down to 61.40. So why don't we go the weekly, and I'll tell you how I came up with 61.40. So if you remember, going into April, I was bearish up here, and I was looking for 4,800, and it was one of the best calls I've made in my career. And the reason I went with 4,800 for a target was historically was a prior record high. So all we did was come back down and test a prior record high, almost to, with the handle, and then took off. So I'm not looking for a crash. I was looking for 10 to 15% down, which gives me a target around 61.40, which is a prior record high, right? This was a prior record high, and now this is a prior record high before we had the tariff tantrum. So this is why it's my target. Plus, I have confluence with some weekly moving averages, and I still think we could be there maybe by the Fed December 10th. So we'll see if this rally has followed through. It's still a negative candle. You still have the divergence on the weekly, and it was rejected there. You still had divergence on the daily, and we got a little bit oversold. But it doesn't mean that today's low is the low of the market, and we're just going to march to new all-time highs. In fact, it could be setting up for big disappointments, because I think there'll be a panic if we take out today's lows. But I do have to admit, the way VIX gave everything up today.
Yeah, we have a question on that. Braden asking, VIX settling below 20, but making a series of higher lows. What are your thoughts?
I don't, I don't like the close, but again, if there's one thing that we learned from today is the lows in the market from today and the highs in VIX. If this is taken out, I think we're on our way to 40. Okay. If the bulls are right, and this was just another little pullback and a melt up, then maybe the VIX won't make higher lows. We noticed that last week. That was part of the reason. And I was just surprised to see this type of rally on a Friday. I have to admit it.
Yeah. So, one thing I want to mention in terms of the VIX, I had a fantastic conversation with Michael Howell. It's on our Substack for Market House members. Go check it out. It was such a great chat. We know Michael's the godfather of liquidity, and he really sort of laid out his thinking, I think, in a really clear way. I took so much away from it. But one of the things that he was saying, and he's watching really closely, isn't even the VIX so much right now. It's what's happening in the repo market. And there's some really stern warning signs coming, and it's not always mirrored in what's happening in the VIX for a variety of reasons. And we know the MOVE index is something that people have been watching on the bond side, but what's happening in the repo market, and he sort of unpacks it and explains it, I think, in a way that everyone can understand, and sort of picked up on a few things that I think are really important for all of us to keep in mind. I highly encourage all of you to go watch that interview.
There wasn't much talk about the repo market this week.
No.
And where's the problem with the repo market today? No, I was one of the reasons I brought something up. If you want to look for a problem in the background, they just shut down the credit union at the credit division of UBS. that was involved in all these credit transactions.
Right.
So there's another cockroach.
Yeah.
Okay?
And it kind of looks like a heart attack shot. So it's not completely seizing up. And so that's why some days it's okay, but it's sort of, you can see the chart when he lays it out. He has it up on the screen. So just watch that. It's a bigger puzzle than just, we really focus on equities all the time, but there's a lot going on. But watch that interview, everyone.
So he's looking for a financial crisis because of the plumbing. He's
worried about the plumbing. He's not calling for a financial crisis, but I think he lays out what we all need to be watching. And he's as always really good at the intersection of what's happening politically and with the Fed and the plumbing. Like there's an intersection there that we really have to keep a clear eye on.
How do you trade it?
Yeah, well, we'll dissect the interview and then come back, Dale, and talk about that. He has some thoughts on portfolio construction, but to your point, navigating trading through that is a whole different kettle of fish. And as always, timing matters, right? And that's trickier, but at least it's really instructive on sort of some signals or some areas of the market to watch really closely. So we have another question on gold, because this is connected to all of this too. Parth asking, what's your view on gold based on, and we will talk about bonds too, but what about gold, Dale?
Well, I mean, what can you say? It's since the big break, all we're doing is moving sideways here. So I've been saying for the last few weeks that if I get a rally back towards 41.20 or so, I'm looking to sell it, because I think that this was just one section of the correction. Ellioticians would call this ABC for A, and perhaps we're going to get a B wave, which will be a lower high, and then we maybe get a quality from 4,100 that could take us to 36. So I think there's another wave to the downside, although I'm not short yet, and it could just break from here. So the same trade plan I've had for 3 weeks is still there. If I get a rally and maybe the dollar, a little pullback in the dollar, I did notice today that when the market was under pressure, the dollar was selling off. And when the market came back, the dollar started to recover. Didn't get it all back, but it started to recover. So to me, that's a little bit of a tell that if you're bullish the stock market and you think it's going to make new highs, you should be bullish the dollar. Okay. And if you're bearish the stock market, I think that we could have a repeat, not to the same degree, of stocks going down and the dollar going down at the same time. So the euro kind of demonstrates it here. So we'll see. See, the euro rallied with a negative market. And then the market recovered, right? So euro pulled in a little bit. But as long as we're holding 1650, maybe the dollar's going to weaken. That could be supportive of gold and silver to rally a bit to where I want to sell it. So we'll see. That's what I think of gold. I think that you could still be patient to own it. Maybe it's going to happen later in the month. But to me, this is, not great action. It's all you could say is it's holding. And that's a pretty big decline and sure taking its time, because I've been, from here, I thought we'd get some type of pop to 4,100 and it's just not happening. So it's got to happen soon. I think maybe it happens next week. The gold actually stabilized with the market. It was lower on the day, and silver actually did a little better. Silver making its way up. Silver's a sell for me as well at the 50 to 50 level. I still think we're going to see 42.
Oof.
So there's your my precious metal view.
What about Bitcoin? Because there was a lot of action in Bitcoin. I think it ended the day. Well, it doesn't really end, but as we close the session, I think that it is looking like it is sitting above 100. But,
Yeah.
we had some commentators saying they don't think the damage is done there. Not sure. I didn't dig into why their thought was that, but maybe they also expect just more risk off. What are your thoughts on Bitcoin?
Well, I've been talking about from here and here that I wanted to see a retest of the crash low, which was about, a little over 100, and we got it. So here we are. I still don't have any divergences on the 4-hour time frame because the last low here was a 22 reading. So if we follow through a little bit and then make new lows and the RSI diverges and stays above 30, you could give it a shot. So, that could be a possible buying opportunity in Bitcoin, maybe around 98 grand. To me, the big level for the bull case is still 92. Okay, we cannot take out 92, or that's going to open the door for big breaks. So it's very possible that Bitcoin's in a bottoming process, but the preferred long is going to be Ethereum. So Ethereum's outperforming. This too confirmed on this last break. So I'd like to see Ethereum make a new low, maybe take out 3,000 and the RSI stay above 30. At least put in a higher low from this RSI reading of 21. So I wouldn't be pressing shorts that much anymore. I'd be looking for reasons to get long and hoping we get a new low to set up some type of divergence at the low, non-confirmation.
I just want to share a comment Christopher put in the chat saying BlackRock has been buying Bitcoin to defend IBIT. Think that effort will fail. It's an interesting observation.
They've got a lot of muscle.
Yes, they do. But it's funny because when you're fighting market trends, sometimes it's hard. I mean, it works for a while, but when the market's fighting you,
no one is bigger than the market.
Yeah.
Even BlackRock.
Yeah, central banks have found that out many times, trying to intervene on currencies. It works for a while, but we have a couple of specifics coming in. Some of this stuff I don't know if Dale watches. We'll see if he feels like doing it on the fly. They seem super specific. But what about bonds? Because I think it's really important that we look at that. You were, if I'm not mistaken, feeling like you were, I don't know if bullish is the right word, but you were constructive on bonds. You thought people were too bearish, I think. Didn't you, Dale? And what are your thoughts now? We do see yields going down.
Yeah. Well, on the short end, the 10-year came off a little bit, but I still think we're headed lower in yields. And the bonds, if you're a bull, we're almost right back to the breakdown again. It's been one heck of a correction from 93. Do not be bullish under 88.5. And this was a big level that was tested many times before the last advance. See it here, 88.5 or so. And now we're, pulling back again. I think that the bonds could make another run towards the 93 level. I think it's possible. It's not a high conviction trade for me, and yields are not. Sometimes I, really have an idea, but I do think that it could come down because I see this is the first drive and this is a second, and I think we're going to get a third that's going to take us back under 4%, maybe to 380 or so. So, I think yields are coming down. Actually, higher yields are more constructive for the market. If yields are going to come down again, it's because the market's worried about economic weakness.
Right.
And if the bonds rally, that's a defensive type of trade. You really didn't get any big flight to quality during the sell-off. That bothers me a little bit. So I would say I'm strongly neutral.
Yeah, it's a great observation. And there are big questions, right, about whether bonds are a safe haven if you are going to get a flight to quality. Some make a vigorous argument that they no longer are. And then, of course, others believe sort of on a shorter term basis, that I think they disagree with that a little bit, or they're not. So These are really specific, Dale. So you can pass on them if you want, because I don't know if you're looking at them. One of them is MP. Someone's asking about MP and also credit spreads. Truck is asking about that. MP, I think, is rare earths.
Someone asked me about rare earths last week when I was on the program. I'm not sure. I think it may have been. Is this a rare earth? Okay, so here's rare earth and strategic metals.
12 MP materials is up 12% today. That's probably why they're asking.
Okay, so I mean, what didn't turn up? Whatever didn't turn back up today has problems. Okay, so I could look at MP specifically for our wonderful audience. MP materials.
It's funny, and then there's the other question is about another thing that rocketed up today, and that is a cannabis ETF.
Yeah, they look good again.
MSOS.
Yeah,
that's interesting.
Yeah, I mean, it's had a pretty big break. So
MSOS.
Again, this MP.
No, MP rather MP. Yeah.
Can you guys see it? And I'm not sure we're going to rocket to new highs. I mean, it's a good level. I mean, I'd say the people a few weeks ago got crushed and probably got out, but there still is a possibility that, we rally and then roll over again. So, I'm still in believing that we're going to have some type of growth scare here and, that there's going to be something cyclically. I'm not sure what it's going to be that sets it off, what the catalyst is going to be. But I think that the signs that we got from things like Nvidia this week, which to me, that's the market. So unless they deliver on earnings, the market has problems. And what I said last week was, I don't think much is going to go up. And almost everything sold off. It was pretty broad base. There wasn't a lot of things moving up while the market was S&Ps were selling off. The recoveries all came today. So it's kind of trading with risk. So if we have follow through in the S&Ps, you'll get follow through here. But if the S&Ps take out today's lows, so will MP materials.
Great observation. It's not like we saw a rotation out of tech into other things. It's it's just risk off. It's just
right.
Risk off.
And I could take a look at Moss. It's I think that it's been just putting people to sleep, moving sideways after the big move, right?
Yeah.
And this kind of looks like, little ABC, pretty good close. So, you could probably get long this thing. Maybe we're going to get rescheduling soon. But, really since August, we've gone nowhere. But we haven't given up much gains. We never filled this gap. Nothing wrong with it being a spec here. Maybe you risk 350 on it. We get it back under 350, you get out of the way. But this is just a high-level consolidation after a big move to the upside.
Tony asking about, is the wheat breakout over?
Okay.
One bushel, 60 pounds of wheat for less than a cup of coffee. Seems too cheap versus gold, etc. Very beaten up.
Well, all the grains are.
Yeah.
Okay, so here's the wheat. I think you buy this break, maybe here around 520 or so. And, all the grains still look okay to me. Corn looks okay. That's still cheap. I still think you buy pullbacks in the grains. We're having a little bit of a pullback in beans, but some beans got bought. Still just a promise, but I wouldn't be getting short wheat here. I'd be a buyer around 10, 15 lower, but where you're wrong, if it makes new lows, you get out of the way. So you get long, say around 530, 525, and you drop your stop in under $5. Because if this pullback holds, we're going to have another nice run to the upside.
Yeah. That's great. I hope that answers your question, Tony. And I appreciate you asking that, because there's so much to watch in the markets that we haven't had a chance to touch on grains in a couple of weeks. Somebody was just referencing Tony and Jared and their conversation on the Macro Dirt podcast. I haven't had a chance to check it out yet, but I will. But Michael Howell told me that Tony was talking about the market coming apart like a soup sandwich, which we really appreciated. He's got some great turns of phrases. And it reminds me, remember everybody, what are y'all doing in February? I'm going to be hosting the TG Macro Conference. I'm so excited about it. We'll put a link in the description, or you can go to tgmacro/conference if you want to join us. It's going to be a great time. Going to get the boots on.
Yeah, I think a week ago, Tony was saying, I'm just swimming in the bubble.
Yeah, exactly.
And then it turned into a soup sandwich. And by the close, he's probably swimming in the bubble again.
He is. He's probably, like the rest of us, exhausted by Friday. But that's great. Okay. The other thing I wanted to mention is we had a great comment. I love that you guys are so active in the chat today. And not only you're asking questions, but some of you are sharing your thoughts, which I really appreciate. Where'd you go? I'm going to find your name in a second, but talking about the Fed. And it's really interesting because it's Mike, considering QT's over, FOMC assets grew, is positive for the QE advance once again, which will drop yields over time. It's interesting that you bring that up, Mike. Go listen to the conversation I had with Michael, because he was talking exactly about the prospect of QT, QE, and what he thinks is going to happen. So I think you're moving in the right direction with that. So Dale, as we close out here, so we can all rest our brains, what are you watching most closely? Stocks? Is if the rally fails, is that what is going to be on your radar first thing Monday?
Yeah, I think the most important level across the board in the market are today's lows in stock indices. And they have to hold, otherwise there's another 10%, 12% to the downside.
Oof.
So bulls have to hope we hold this low that we put in today.
So we started the show by saying, should investors be nervous?
And I did say that it would take a decline in the market for the Fed to come in and move in December. So if this rally, if we blow off to new highs, I don't think the Fed's going to use that bullet. Okay, but if we're declining towards 6,400 or so into the Fed meeting, they'll use the bullet. That's the way I see it.
Dale, we say it all the time. There's no better way to end the week than with you. Thank you so much.
Thanks, Maggie.
Amazing stuff. Thank you all for turning up and having such a great conversation. We're all tired. It's the weekend. Go enjoy yourselves. Have some fun. Some relaxation, and we'll see you all back here Monday. Thanks, everybody. Take care and good luck out there.